Time for another stock review. This time we're talking Datadog, DDOG. If you are one of my members and you do a minimum $5 super chat, I will do an analysis and review like this and promote it on YouTube, and you will end up with a video that ranks. I'm sure most of my videos rank for number one for the stocks. Remember, I don't own any of the stocks I review. I only own the S&P, so you know my views are real, unbiased, factual, present you the news in the best way possible, not to pump and dump a stock, okay? It's not financial advice, but I'm just breaking down the news for you. Please tap the like button, consider subscribing. During this review, I will break down what the stock is. I will also share with you unedited, live as it happens. These videos are always made live. Using Alpha Spread, you can get my software for free or a discounted pro version. I will share with you the intrinsic valuation. I will share with you the profit, the loss, who's buying on the inside, who's selling on the inside. I'll also share with you my Seeking Alpha Pro platform, which you can again get a free trial and discounts for. Latest news, back tests, all of this will be covered during this review. All right, so have you tapped the like button? Have you left a comment? Do you like this? Would you like me to do a review for you? Let's get straight into it, and hopefully then you'll be able to make an informed decision whether this is a stock that you should buy, hold, or sell. Let's start nice and simple. I don't apologize for starting simple, and we get more advanced as we go through the review. So there you go. Let's have a look at the maximum line. As you can see, over period since 2019, the stock is trending up. Certainly looks like a tradable stock to me so far. Back on the day, we're up today 1.21. What is the company? Datadog engages in the development of monitoring and analytics platform for developers, information technology, operations, teams, and business users. Its platforms integrated and automates infrastructure, monitoring, application performance, monitoring, and log management to provide real-time observability of its customers' entire technology stack. Okay. Now we have an indication of what this is about. Olivier Pomel, if you'd like Olivier on the show, the CEO, please email customer relations, investor relations. Tell them that you're an investor and you'd like them on the Martyn Lucas Meet the CEO series. I'd love to hear from him and learn about the company. Not to pump and dump it, but to provide a ranking video to inform their investors of what it's all about. Build a relationship. When you have done that with the company, let me know and then put them in contact with me. 5,200 employees, headquarters New York, founded in 2010. Quite a new company, but good when it comes to margin maintenance, 25%, the same with the S&P 500. So it's regarded as relatively low risk. You can see that from the trending upwards. 53.2 is the market cap. Price to earnings ratio, 286 times earnings. This is much more expensive than Nvidia. This is more like Palantir and the early days of Tesla. Very, very expensive. Obviously, no dividend here. There wouldn't be. It's a growth stock. Low volume. Very, very low volume. Now, why volume is important is high volume allows you to trade it. There's always somebody wanting to buy your shares. If it's a low volume, it's harder to sell for the price that you want. Always use limit orders. Don't just click the buy because you can end up not getting, when it's low volume like this, you can end up selling your stock or buying your stock for the wrong price. You need to make sure, particularly with a low volume stock, that you set your buy limit orders, not just click buy and hope for the best. Very, very bad idea if you do that. Okay, let's look at the analysis. Morningstar, who I don't take any notice of, they're paid to say these things. They say strong buy rating, 91%. Okay, 91% sounds very expensive for me. See where I'm going with that? They're paid to say these things. I don't know. Datadog is focused primarily on small and medium-sized clients. We see a big enterprise opportunity for the firm. This was out just a couple of weeks ago. Bears are saying Datadog's penetration of the enterprise market lags some of its peers. That's what the bears say. Now, let me show you the trading interest. Let's see how and who and why and what's buying the stock. Robinhood investors, you know me. Even though I'm a Robinhood investor, I don't care what other Robinhood investors do, really, because they can't move the market. Not a company this size. GameStop, a meme stock, yeah, of course. But otherwise, I'm only interested in hedge fund managers and insiders. These are the friends I have on X and Instagram. They tell me what's going on. Looks like we have, looking at the sides of the trades, looks like we have taxable trades. That's no big deal. The stocks, the hedge funds aren't dumping it. They're just trimming as they go. It's a responsible thing to do. Insiders, well, they've been selling more, but again, very, very slow. Very, very low volume. 1 million. Look at the trades. Nothing. That tells you that they're just doing tax transactions. No issue there. We all want to see buy-ins coming in, but these aren't buy-ins or sales. These are just very, very small, taxable trades. Economic moat, narrow, not non-existent, narrow. We'll talk about the margin profits in a minute and how that impacts the moat. Fair value, 130. So they're saying 130. So it's overvalued because of 156, even though it's a strong buy. Well, we can look at that in a moment. Uncertainty, very high. That doesn't mean anything at all. Anything new is like this. I'm not concerned about the very high, and I'll explain why later. Look at the earnings. Now, this is a great story. It's a profitable business. The earnings have been moving up, but what's interesting is Wall Street cannot analyze this. They can't get this even close. The company are outperforming what analysts are saying, what Wall Street is saying. Remember, the light green at the bottom, or I should say the dark green at the bottom, that's what analysts think the stock's going to do. That's not what the stocks say they're going to do. That's not what the company said they're going to do. You don't know what they're going to do until they release, right? Virtual handshake to Martyn for Mobix. Who is Thoddyfly? Is that my friend messaging me on X? If that is you, could you let me know? I'm making this during a live video. This will be interesting. We've got some very exciting news coming out shortly. I want to know, is that my contact on X? Just reply back to me. Anyway, virtual handshake to Martyn for Mobix. Very exciting news, if that's what I think it is. Anyway, they can't really analyze the stock, and you can see it's been performing well, and it keeps surprising. You can see why the stock is overbought on that basis, because people believe in it more than Wall Street believes in it and buys it with the belief it's going up, and it keeps doing that, and it keeps going up nicely. Now, we have had a slight dip in expectation, so something is scaring Wall Street a bit, but is it going to beat again? And if it does, will it beat by a large amount? Probably. So anyway, let's scroll on down, see who's buying the stock, gives you an idea. So again, you can see companies here where people all get very passionate about it. So value could go out of the window with this stock. CrowdStrike Holdings, Salesforce, Airbnb, Cloudflare, Shopify, Trade Desk, Dexcom. No, I'm new, but love you. Virtual handshake to Martyn. Oh, I see. You're thanking me. You enjoyed the earnings, the event. Okay, now I understand. Thank you very much for explaining. Twilio, Crown Castle. Okay, we see some volatile stocks here. We can see a very similar pattern. Okay, with that, so you can see a good indication of that. The sentiment of the stock. Right, let me show you now the news on the stock. Let's have a look at that now as we scroll down. If you like this, please tap the like button and consider subscribing to the channel. It's most certainly, I've already noticed, it's a tradable stock, but you can see the volatility here until recently, year to date up 31%. Anyway, let's go and look at the news and let's learn more about it. First of all then, now this is interesting. This is interesting. We'll start with this. If we look at this, first of all, this is my Seeking Alpha analysis. If you want to use my software, the links are below. Free trials, discounts, Black Friday, and there's my alpha spread. I'll put it in the chat for you now, but also everybody else can get that later on below the video. This is interesting. The forward PE is 87 times. Well, you can see how much better the forward is. So their projections, their growth forecasts are actually now making the stock not as expensive as it appears. Now I can see why people are buying it. Remember, we've had Tesla, triple these numbers. People were still buying it. Palantir, double these numbers, I think, double numbers. People still buy it. People love this stock and want to own it. But the forward ratio isn't actually as bad as you think. 87 times earnings, it's a lot, it's expensive. However, nowhere near what the lagging indicator is. That's why this software is so useful, telling you actually it's not as expensive as you think it is. Short interest, 3%. Sorry you can't see it, but short interest, 3%. Don't expect a short squeeze. Don't expect a major downtrend. 3%. When a stock is dramatically overbought and expensive, you'd expect it to be higher. It's not. So that's why the stock keeps going up. The 3% short really isn't anything to drive it down. Seeking Alpha analysts, they say buy. Strong buy from Wall Street, and Quant are saying hold. No selling, definitely a buy. Okay. Valuation, like I said, it's expensive, but the growth is B, hasn't changed. Profitability, A minus from A. From A again, down slightly, but not much. Momentum, B+, down, up from C, and revisions, B+. So it looks quite optimistic. It looks a buy from where I'm looking at the moment, but there's more to this, and we're going to come on to it in a moment. So looks pretty good from the factor grades, momentum, and the ratings. Let's move on to the news. We've got some news here to share with you, but I'm also going to look first of all at a back test. This is where I've compared the stock to the S&P. This is going back to 2020. We only have 4 years, so it's not really a good tool to use against the S&P, but it's the best that we have. As you can see, Datadog is up and down and up, right? But it's not ever trending below the S&P over 4 years. A reasonable time frame. It's never gone below the S&P. It's outperformed the S&P. And as you can see, you can buy here, sell here, buy here, sell here, buy here, sell here, buy, sell. You can see how you can make money from this stock. If you put in 2020 $10,000, you'd now have doubled your money in 4 years, 19 grand in the S&P. You'd have 3x in Datadog. So I can see the attraction to that from the back test. Remember, there's no dividend here. This is just growth. All right. Okay. Let's look at the news, and then we'll go into our alpha spread, and we'll look at the data, the alpha data. All right, so let's have a look. Please tap the like button if you are enjoying this so far, and consider subscribing. That would be absolutely fantastic. Let's have a look. Datadog keeps bullish view as analysts praise strong Q3 earnings. Let's have a little look. Morgan Stanley maintains overweight rating on Datadog and raised the price target on the shares to 143 from 137. It's past that now. This was just a few days ago. Analysts led by Sanjit Singh said Datadog posted the biggest beat of 24, a strong growth from enterprise customers. Now, this is interesting, that word enterprise, because this is NVIDIA speak, Google speak, Meta speak, and all the rest of it. Microsoft. These companies are doing well and they're spending money with each other. I like it. If there's enterprise money flying around, I can see why Datadog is being bought up. I can see that this will be, I already know from the language that this is going to trend on Google, and more people are going to learn about this. And I can see this doing well from a video point of view, which means people love this sort of news, and a bullish sentiment can remain here. I can already see how this is going to go. This could be another SoundHound. It could be another NVIDIA. on our channel. We shall see. In the near term, modest deceleration is likely, but the analyst thinks the company is a top beneficiary once the AI cycle transitions from training to inference, thus giving the overweight rating, the analyst added. Datadog reported its strongest revenue beat of the year, resulting in growth of about 26% versus around 27% in the second quarter. Large customers remained the fastest growing group, which translated into another quarter of modestly improving net retention and usage growth, according to the analyst. The fourth quarter revenue outlook was in line and implies growth of 20% to 21%, according to the analyst. Singh and his team see Datadog at or near peak execution, implying that better growth needs a stronger spend environment or the AI cycle moving from training to inference. Citi kept its buy rating on Datadog and increased the price target on the shares from 157 from 150. Okay, I'm not going to read any more of that. I'm going to move on to this next story here. Datadog revenue soars, raises 24 outlook. We've already talked about that. Is there just a couple of paragraphs I'll pick up? Datadog stock was strongly flat pre-market on Thursday after third quarter results and outlook exceeded expectations for the third quarter, September 30th. Okay, that's a little while ago. That was the earnings. Okay, we've seen that grow. The outlook, the company expects fourth quarter revenue to be between 709 and 713 million, which was above consensus estimates of 710. Quite a decent amount, actually. When is the earnings? When's it going to be? We might cover this if one of our members does a $5 super chat. Expected February the 11th, pre-market. Okay, so we might do this earnings if it's requested. Let's go now, and if you do like Seeking Alpha and all this information, there's a Seeking Alpha or the list, or it'll be pinned below. Let's now go to the alpha spread, which is what I like to give me a real sense of where the company is going. I like this software. Please tap the like, subscribe, ring the bell. If you like Seeking Alpha spread, I've got a deal with the CEO, which can make my membership for free. There's a free plan, plus you can get a discount so good, it makes my membership for free. Now, if we look at the valuation, I can see now why this is being overbought. It makes sense. It's perfectly understandable. Overvalued by 70%. Now, my rule is never to buy something more than 25% overvaluation. However, looking at the PE, that would translate to about a 50% overvaluation, which is still hot for me, but I can see why. And certain stocks like Nvidia and anything that drags in AI and relationships to it can be overbought, but the growth, the forecast looks good where it's going. As long as we got a good balance sheet, plenty of cash, not too much debt, this could be a buy from me. And I know that this is going to be received well on YouTube, so I can see people lining up to buy this stock already. So We'll come on to that in a moment. So let's have a look at the valuation, right? We'll look at it properly. So let me just keep an eye on that. Right. Okay. So intrinsic valuation isn't too bad. If we look at best case scenario, 46%. Worst case, we're not in a worst case, and we're not much off the base case. So I think we're more in a best case scenario. I can see why you want to buy this. I can see why. I think it's Brian Bynum sponsored this one. Why he wants to buy it. I can see it. Let me scroll down. Let me come on to revenue. Now, revenue, we've got approaching an S-curve, up 6% and expecting it to climb in the future. I can see how it can. So the revenue is good. Operating income up 51% and expecting a big boom here in December. Bloody hell. Guidance is great. If that comes off, I can see the stock doing well. Yeah. Up 18%. S-curve in December. Woof. Woof, woof, woof. Look at that. Woof. What a jump that is. Okay. I can see why you want to buy this. And as I talk about it, very often happens in my reviews, being bought up. Look, it's being bought up again. I can see why this would be good. So far, it's a potential buy from me, but I haven't seen the balance sheet yet. Investing cash flow up 17%. That's a negative. Operating cash flow up 10%. Let's scroll down here. Balance sheet, right. 4.6 billion in assets. Cash 3.2. Bit rich on cash. Not a bad thing, but I prefer not to have so much cash, really. But, it's not a bad thing to have cash, but it also means that, cash is 69% of their business. It's not the sort of thing I like, but it depends on the debt position. 4.6 billion in assets, 3.2 billion in cash. Long-term debts, none. Short-term debt, none. Loads of cash. Well, we all know what comes next. From experience of doing this, we know that we're going to get we know that we're going to get a good balance sheet. We know we're going to get a good solvency, which means, from what I just said, it's a buy from me, even though it's expensive. But NVIDIA is expensive. But look at the forward. It's not as bad as you think it is. Okay, I can see where this is going. It's going to be a buy from me. Let's have a look here. Now, operating margin is 81%. Sorry, gross margin is 81%. Operating margin, now this is where it falls down a little bit. Net margin. We want to see these net margins going up. They're obviously spending money because the net margin is nowhere near where it wants to be. If we look at it earlier, it said the moat, I think it was small. Narrow. Yes, it is. You see that, look? When we looked at our previous analysis, it was none. Now we've got narrow because that was net margin of 6. This is net margin of 8. So it's better, but it's narrow. We need to increase this. I'm in the wrong page. There we go, back to here. Net margin of 8. FCF margin 29%. If you want to know what these mean, again, you can access my software, open up more information, look below in the video. Alpha Spread, strongly recommend everyone gets it. You can get a free plan or a pro plan, which makes my membership for free. It's that good. The deal I've got with Alpha Spread is really good with the CEO. You're going to love it. It's really cheap. It's a lot cheaper than Seeking Alpha, a lot cheaper. And I like the way it's laid out, really. ROIC 5%, ROA 5%, and all this moving up. Okay. Let's look at this. There you go. Profitability 56. So it's early days though for this company. It's quite new. We talked about it earlier, didn't we? It's only been around since founded 2010, but it went on the market from a public point of view in 2019. It's a new company, so profitability is bound to be low in the early years. It makes perfect sense. 56% though is still quite good, but just not great. But it's early. But like I said, there you go. That's what you want. Solvency, solid. You can invest in it, not worry about it. Brian Bynum, I know you're excited about this one. I'm going to give it a buy. I'm going to give it a buy because, not because of the downside, Wall Street, because we're not in that territory. It's flat on the average. We're not losing money. That is why I like it. And I think that's where we are. 54% upside. So I'm with you, Brian. It's a buy from me. It's expensive. Just don't get carried away all at once. I know you'll be happy with that because you'd be buying it. 65%, 65 million. These are tax positions sold. People taking profits. Well, we see Jensen doing it all the time. I'm not worried about that. So let me wrap up my review of Datadog. This, I know, definitely is going to trend on YouTube. I bet it'll be one of my top, and it'll be up there with SoundHound. It'll be up there with NVIDIA, maybe NVIDIA. I see the relationship. The balance sheet is okay. It's a young business. I like the correlation. They've got no debt, no short-term, no long-term. It's expensive, but I can see why it's expensive. People are buying it ahead of time. It's a tradable stock. My thoughts would be that's the maximum position we're looking at right there. If I'd say it's a buy. I like the sector, but if I was buying this again, what I would do absolutely with this stock, 100%. It's trending up at the moment. It's approaching all-time highs. I would, if I had $1,000, I would put 500 in. I'd put 50% in. I'd put 50% in, not all in. I would, if I then made a 5% profit, I would trim half my position. I would then have a 5% profit. I would do it on my IRA, so I could trade it tax-free. I wouldn't do it on a brokerage account. I would then sell half the position. I would then wait for a dip, and I would wait for a dip. I would then buy back with the profit and the half of the money that I took out. I would add then my other 50% when it dipped like when it went back down to where I bought it, but perhaps actually a discount, another 5%. I would then be all in with my full allocation. I would then let that run for a while. I would then be looking for another 5% profit, and it wouldn't take many more of those to have my seed money out. So it's now, if you like, playing with the house's money, and then I would build a position over time without any risk like that. That's how I would play this. So Datadog is a buy from me with that structure, discipline, patience, waiting it out, doing that. That's what I would do. I would enter it today with a 50% of my allocation, wherever it is I'd allocated to buy this stock, and stick to that, and you'd be all right. I like it. Click above my head for all the links down below in the description. I'll post alpha spread, seeking alpha, and all the rest of it. Over here, I shall put the playlist for Datadog. It's probably the first one. So all the news, if anyone asks me to do an earnings, any breaking news. If this video does well, I'm sure I'll start covering breaking news from it here. And down here, I should put the alpha spread playlist where I've reviewed many stocks, over 300, and you could check out all my analysis stock down below. All right, that's it from me. And if you like this information, 24 hours a day, we have a radio show now on the Extra channel. I'll put the link below that as well, where we go live 24 hours a day now with different scenes, always bringing you financial radio. Listen in.
Hasn't been reached yet, Nick. So where do we stand?
Discussion, debate, live news, trends, analysis. It's a communication for the family to talk to each other, share opinions, thoughts. You can see all this chat going down here 24 hours a day. A new service. So pretty good, right? It's I'm very excited about that. Anyway, there you go. I'll give you the links again, above my head, down below, over here, and over here. Check below for the Extra channel, also be pinned to the top as well of the comments. Until next time, as always, take care of yourselves and each other.